What's up you guys? Welcome back to the Average Joe Investor channel. In this video, we're going to get right into it. I don't want to waste any of your time. In the previous video, we talked a lot about the key metrics to blowing up your dividend income with your dividend stock portfolio. And I got honestly a lot of questions in the comments about, well, that's great, but how do we actually implement this? Are there actual dividend stocks that can meet this criteria? And I appreciate the skepticism, I appreciate the questions and the feedback, because I want to make sure that we can actually follow through and build this portfolio. So in this video, we are diving right into how to build this portfolio. Now, for full awareness here, we're going to utilize my dividend stock spreadsheet that I make available to my Patreon community. You can certainly find lists of dividend stocks with the metrics that are necessary. It just might be a little bit more difficult. If you'd like more information on how to join the Patreon community, there's a link in the description below. Just as a recap, the goal, if we can achieve it, if we can get as close as possible, the goal is to have a dividend growth rate as close to 10% as possible year over year. And we want to have a yield of a 4% ideally, but we realized in the results from the previous video that we can start with a lower yield and still achieve amazing results. And we also want to keep in mind dividend safety, which we will cover in this video. All right, so here is the dividend stock spreadsheet for October 2021. And for those of you in the Patreon community, it's available now if you'd like it. All right, so in this October dividend spreadsheet, you're going to see here a new tab for exploding dividend income, which we're going to use so that we can model out what stocks can actually make this work. So given the fact that we have some variability or some freedom in the dividend yield, let's go ahead and start sorting this out here. Let's go ahead and say we'll pick up any stocks over, we'll say 2%. I know we're going to go above that, but let's just so we can see them, we'll go above 2%. Next step, what we're going to do is we're going to move over here to the payout ratio. Okay, now remember, in general, what we want to do here is we want to have a payout ratio less than 75%, though I'm open to going up to 85% if it's a dividend stock that's been raising their dividend consistently for at least 10 consecutive years. And if we can see over here that the free cash flow per share is consistent historically. So we're going to go in here, we're going to filter by less than or equal to 85%. Okay, so we've done that now here. Now let's go back over to our dividend growth rates, okay? Now, again, I mentioned previously, and I mentioned multiple times in previous videos, that the one-year growth rate can be a little bit tricky right now because of COVID, because companies still raise their dividends, but due to the uncertain environment, they might have raised it lower than normal. So we're going to focus on 3-year, 5-year, and 10-year growth rates, and we want to be as close to 10% as possible. So I'm going to include up to 7% and higher here for all three, the 3, 5, and the 10-year growth rates. Now what we're going to do here with the dividend growth rates here, remember, not every single dividend stock in our portfolio needs to have a dividend growth rate north of 10% or that target objective. We can have some that are higher and some that are lower. Same thing with dividend yield. We can have yields that are higher and have lower growth rates, and vice versa, have stocks that have a lower yield but higher dividend growth rates. The goal, if we come over here to our exploding dividend income, is to have down here, and this will start to populate here for us in a second, 3, 5, and 10-year weighted yields in the portfolio and dividend yield weighted for the portfolio to be at or above our target objective. So as you can see here, we've got quite a few stocks here that can meet our objectives. Let's go ahead and sort by highest 3-year growth rate. Let's start there. I'm going to tell you right off the bat, this is one of the dividend stocks I knew I wanted to include, which is AVGO, which is Broadcom Inc. This one here is a contender, 12 consecutive years of increases. It's got really great dividend growth rates. Even during COVID, it raised its dividend by 10.8%, and it's got a current yield that's a little bit lower, 2.92%, but the dividend growth rate is amazing, so I know I want to include AVGO. All right, so we've got AVGO in the portfolio. Let's go over here. All right, so we've got Arbor Realty Trust here, ABR. It's been raising its dividend for 9 consecutive years. Okay, dividend growth rate, 10.8, 14.2, 17.1, and a yield of 7.36%. Let's go ahead and include ABR. And right now I'm just assuming equal weighting in the portfolio, and we're going to aim for 20 stocks in here, so each one's going to have a 5% weighting, though we can adjust that if necessary to meet our objectives. All right, we've got Manulife Corporation right here, really low payout ratio, dividend growth rate here in the teens, though the 1-year growth rate was a little bit lower here, and dividend yield 5.66%. Let's go ahead and include Manulife. You guys knew I wasn't going to exclude AbbVie here, right? AbbVie, great dividend growth rates and a good dividend yield here at 4.69%. Let's go ahead and include AbbVie. Let's go ahead and filter in some of our dividend champions right now, okay? Long dividend streaks. Let's see if we can capture one with some great dividend growth rates. All right, so we got T. Rowe Price Group right here in the financial financial sector. It's got great dividend growth rates and lower yield. Okay, so we're going to start with adding this one in here, and we may have to adjust the weighting of the portfolio to make this work, but we really like the dividend growth rate and the consistency here. Same thing up here with Illinois Toolworks right here, and Cisco Corporation. These great dividend growth rates here, long-term, low yields, I get it, and we'll see if we need to adjust that as we go. We also got Bank of the Ozark right up here, Dividend Champion, 25 years, 13, 12, and 20 up here, and a 2.6% yield. Let's go ahead and include Ozark. And then we'll include two more here that are more Dividend Champions with great solidified dividend growth rates over the long term. We've got up here around 7%. We've got Clorox right here at 2.81% yield, and UGI Corporation at 3.11%. Now you'll notice here we've only got half of our portfolio filled up here, and we're already tracking really great on our dividend growth rates, even though we don't even have these positions filled at 7.2%. Growth rate 9% and 5.9% here on the 10-year. Instead of Champion, let's go ahead and filter in some contenders so we can increase maybe our yields a little bit. Now these two up here are lower on their dividend growth rates. They're not at 10%, right? But remember, it's a portfolio growth rate that we're aiming for here. So we can accept some lower growth rates as long as we're getting higher yield and we're balancing with other stocks in the portfolio. So let's go ahead and include NWBI and SGU, actually both of which are in my portfolio. Northwest Bankshares, Star Group. Here's one that's interesting. Fulton Financial Corporation, dividend contender, 12 consecutive years increases. You can see here that they massively increased their dividend over the 1-year growth rate, but their 3, 5, and 10-year growth rates are really great, 13, 12, and 14%, currently yielding 3.46%, and their payout ratio is only 23%. Now, I'm not telling you that you should buy all these companies. I'm just showing you guys that there's plenty of options available right now, guys. Plenty of dividend stocks to choose from. I would tell you, I'd want you to know more about Fulton Financial Corporation before you put them in your portfolio. Maybe it's a great stock. I'm just telling you the metrics we're looking at here look good for our portfolio. All right, let's go over to some dividend challengers. Now we know that they only have 5 to 9 years of growth, but we're balancing our portfolio, which makes it okay. This is one that I really love for my portfolio. I like Westlake Chemical. Yes, I know it's only got 6 years here. I know that the 1 year was low, but remember, COVID. Okay, I'm still watching this. If you want to, you can include this one. It's got 6.3% on the 3-year growth rate, 8.6% on the 5-year growth rate, and it's got a great yield to give us balance in our portfolio on the yield and a really low payout ratio. Here's another one I used to have in my portfolio. I moved it out because it just had much lower yield than I was targeting at the time. I've got Regions Financial Corporation right here, 9 years of growth. 1 year, again, COVID related could be. So if you are really concerned about that, you could just say, I still want to only pick up stocks that have double-digit yields here, or double-digit growth rates, but I still like Regions Financial based on their 3 and 5-year growth rates, yielding 3.11%. Payout ratio only 34%. You can also include Gilead Sciences right here, GILD, got good metrics. And we can also include 2 more here. I'm just trying to fill them up here just to kind of show the example. We've got LSBK for Lakeshore, and we've got FIBK, 2 banking, like regional banks here that all have really great dividend growth metrics and good yields here north of 3%. All right, here, rounding it out, let's go ahead and include this real estate investment trust, Care Trust REIT. Actually used to be in my portfolio a number of months ago. I ended up consolidating just down to 2 real estate investment trusts. So we'll go ahead and include CTRE. 7 consecutive years of growth. The 3 and 5-year growth rates are 9.3, 9.3, really good. 5.23% dividend yield currently, and 71% on the payout ratio. We accept higher payout ratios for real estate investment trusts, master limited partnerships, business development companies, because by law, they have to distribute at least 90% of their taxable income to their shareholders in order to not be taxed as a corporation. And then lastly here, let's just plug in one more dividend champion. We'll go with the 3M company. Really high quality dividend stock. Has a little bit lower growth rates here if we look at the 3, 5, and 10-year growth rates, but still got a strong yield, 3.33%. 48% on their free cash flow payout ratio. All right, guys, so here are the stocks we ended up landing with. We've got Broadcom, Arbor Realty Trust, Manulife Corporation, AbbVie, Illinois Toolworks, Cisco Corporation, T. Rowe Price Group, Bank of the Ozark, UGI Corporation, the Clorox Company, Northwest Bankshares, Star Group, Fulton Financial Corporation, Westlake Chemical, Regions Financial, Gilead Sciences, Lakeshore Bancorp, Care Trust REIT, and 3M Company. If we sort based on the dividend tier, we can see here we're pretty balanced actually. We've got 1, 2, 3, 4, 5, 6, 7, 8 different dividend challengers. We've got how many here? 7 dividend champions and 4 dividend contenders. Good balance here on the dividend streak. We're equally weighting everything here, okay? Dividend growth rates all on the 3, 5, and 10-year growth rates, very strong here. And here's what I want to focus in on, guys. Let me just zoom in here, down here so you can see. Look, this is our final weighting on all this portfolio. We've got 11.2% dividend growth rate for the portfolio on the 3-year. 5-year dividend growth rate is 13.6%. 10-year growth rate is 7.8%, but this number down here doesn't factor in the fact that half of them are NA, so it's actually much higher here. And then here's our portfolio yield right now, 3.53%. And we've actually got some room here in the dividend growth rate. We could actually bring this down and weight the portfolio on higher yields. Let's go ahead and actually weight it just a little bit more heavily on the higher dividend stocks and see what happens. Let's go ahead and come in here. Let's make stocks like Arbor Realty Trust. We'll make this 7%. We'll make Westlake Chemical 7%. We got a 5% down here. We'll make that 7% of the portfolio. 7% of the portfolio. We're a little high here. Let me just go ahead and make sure we stay at 100%. We still have plenty of room here on our dividend growth rate. We're still at 11.6, 14.1, 7.7. We can even, if we really wanted to get this to 4%, that one down to 3, that one down to 3%, that one down to 4%. There we go, guys. I just did it for you. We have 4% on our yield based on these weightings right here. Okay, our dividend growth rate on the 3, 5, and 10 years, 11.4, 14% on the 3-year, and 6.7% on the 10-year. Remember, that's not factoring in the NAs. I just didn't change the calculation to make it more complex. It's only factoring in these right here, but it's also including these NAs as like zeros. So, important point here though is we can do it. We can actually create a portfolio that yields 4%. That has dividend growth rates north of 10%. Now, can I tell you 100% in certainty that this is going to stay this way for the next 15 years? No, I can't. The portfolio may require some adjustments if it fluctuates on the dividend growth rate. But as long as those dividend growth rates stay in that range of 8 to 12%, guys, we're going to be successful in our portfolio. This will take a little bit more work than just owning a dividend ETF, but it doesn't have to take a lot of work. The check-ins here only take maybe once a quarter, if that. Sometimes you can come in here and check in semi-annually or annually just to make sure that the dividends are being paid as they are supposed to be. For those of you who are in the Patreon community that want to utilize this little tab here, the exploding dividend income, because all you have to do is plug in the ticker symbols here and your weightings, and it'll do all the calculations for you. I'm going to go ahead and update the dividend stock spreadsheet that's available in Patreon so you can access this one and actually try it in both Google Sheets as well as in the Excel spreadsheet. Make sure to leave your 2 cents in the comments below, guys. I want to get your feedback. I want to know what your thoughts are on this video. I know that there was a lot of skepticism, especially from some more experienced investors. I know that there were a lot of concerns about being able to build a portfolio. I think I've proven to you that even these insanely high prices that we have in the stock market, it's still possible to build a dividend portfolio that's going to grow their dividends over time and maintain strong yields so that you can have exploding dividend income in the future. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy both physically and financially. Have a good one.